Eddie Gartner here, Epic Financial Strategies, and what we're going to talk about today is what's happening in the economy in 2024. So what's really important, what's going on? Like, look at your checkbook, look at inflation, look at the things that are happening today. Discretionary spending is at a low, consumer debt is at a high, and you got to look at not just the consumer debt, but the defaults on that debt. That's beginning to rise. So these are things that are happening in the economy that are important. We're going to talk about that. We're going to talk about some geopolitical things. But what we're also going to talk about is what's most important to you and how you can strategize around it. You know, the bad news here is there is a slowing down across the world, but if you stay to the end, what we're going to talk about is the things that are important to you and how you can work through all these challenges. But let's just get into it right here. In the second half of 2024, the global economy faces uncertainty with moderate growth forecasts. According to the World Economic Forum, anticipates that a slight decline in global growth to 2.9%, influenced by geopolitical tensions and economic fragmentation. In the U.S., growth is also expected to slow, with forecasts suggesting a soft landing as economic activities adjust to post-pandemic norms and monetary policy. Well, first, let's talk about what monetary policy is. That is the Federal Reserve. So you hear a lot in the news about interest rate hikes and also interest rate cuts. And according to Mohammed Al-Arian, who spoke to Business Insider, what he's saying is that he thinks that by the time the Fed actually does a rate cut, that it'll be too late in the economy for them to actually hit that soft landing, further causing a recession. But let's think about all the different things that are going on when it comes to interest rates. As you see, interest rates have spiked over the last year and a half. And that spike in interest rates have caused a lot of problems. If we look at just food, right, and we talk about inflation, the reason the Fed is raising interest rates is to help tamper down inflation. But if you go to the grocery store, you're at the gas station, you're feeling the effects of that inflation. You're feeling it in your wallet, which is also why we see the rise in consumer debt and also why we're seeing a rise in consumer defaults. And what that really means is that the economy is struggling right now. Even though what you see in the stock market is rising stock markets, these things are going to come to pass where we're really feeling the squeeze right now. So we touched on a few of these things, but let's get into the impacts that are on consumer behavior, because this is something that we have not seen, right? Not in our most recent times. So first is the geopolitical tensions. Increased conflicts in Europe and the Middle East have disrupted trade. The Eurozone impact conflicts with flattened Eurozone GDP in 2024. What does that mean? It's not just the US that's slowing down, it's also Europe. Oil prices rise. So conflicts that we're seeing are driving oil prices up, further impacting inflation. How does the US benefit? Well, the US benefits partially from higher oil prices, offset by increased US defense spending. Right? And what are we talking about there? We'll get into it in a little bit. And things are actually a little better than they could be, right? There's economic stimulation. What's that coming from? It's coming from US defense spending. It acts as an economic stimulus amidst the downturns, right? We always talk about, or you hear from history, that going to war helps get out of a recession, right? Why? Because we're spending more money on defense. But that defense is also, a lot of that budget is coming from fuel costs, right? And other things that they're doing for these geopolitical tensions, right? We're out there policing the world for better or worse, right? It doesn't matter what side of the aisle you're on, your tax dollars are going to fund these things. And so it's important for you to understand that this political climate and these tensions that are with Russia and the Ukraine, or the things that are happening in the Middle East, you can't actually impact that, right? And so while there's a lot of fear out there in all these things that are happening, and yes, you should be aware of it, it's not the thing that's going to help you get to where you want to be if you're only focused on the bad. So what we need to talk about is how can you take these situations and the things that are going on and impact your own life through a better mindset, right? Through doing the right things with your dollars and your personal economy, so we're not mirroring what the government's doing with our economy. So one of the most controversial things that's been coming along is artificial intelligence, right? AI. And how is it going to impact labor markets? What's it going to do? Are you going to be replaced by artificial intelligence, right? And the truth of the matter is, the US labor markets have remained strong with ongoing demand for jobs, supported by technological advancements and higher labor force participation. This includes the integration of AI and other technologies that are expected to continue altering the economic landscape and job markets. What does that mean in English? Look, AI is a great tool and can really help people accelerate their job, do things in a shorter amount of time. So if you can stay up with the technology, that's going to be beautiful. But AI is not going to replace the plumber or the tradesman or any of the people that have to come and physically do the work at your place, right? So those jobs aren't going anywhere. And in fact, those jobs will be in higher demand because we've seen less and less people in the trades. So that would be one area that you want to look at. But when we come back to AI, one of the things that we're seeing, despite the labor force being high and remaining strong, what we're actually seeing is a lot more part-time jobs, right? So people are taking on multiple jobs because there's not the same demand for the full-time labor force that was once needed. So these are things to think about if you're in a situation where you could utilize AI technology and get your work done in a quicker amount of time. You could take on multiple jobs, further increasing your income. So a question you also have to ask yourself is, where am I, right? Because we're talking about the economy mostly in the US, right? And there are geopolitical things that go into the economy. But if you're in China, or you're in South America, or you're in Europe, you're going to have a different situation, right? Because it's different economies, different governments, different things that are going on. So looking at that, economic conditions will vary significantly across different regions, with Asia, particularly China, showing resilience, whereas Europe faces more pronounced challenges. This divergence affects multinational operations and investment decisions. You may want to ask, are your savings and investments robust enough to handle a diminishing value of the US dollar? And that's really the most important thing if you're in the US. Is your dollar, are your investments actually keeping up with the inflation in this country, right? If your dollars are not keeping up or pacing inflation, you're gonna have real challenges. And for most of us out there, they're not. Why? Because we've seen such rapid inflation. Now, what they'll tell you is that inflation has come down. It's true, the rate of inflation growth has come down to a more normalized level. But what hasn't happened is we haven't had deflation, right? We haven't had things go back down, because just 4 years ago, things were cost probably 25 to 30% less on average. So these are things that you want to take a look at and be very wary of the data coming out of some of these governments that aren't the US, and also be wary of the US information as well. So like we said at the beginning, the important thing is, how do you strategize, right? What are the things that you're supposed to do? To effectively navigate the 2024 economic landscape, individuals and businesses should prioritize financial agility and risk management. Given the varying economic conditions globally, diversifying investments and maintaining a robust emergency fund are prudent strategies. So what does this really mean for you, right? There's so much stuff, again, in the economy that you have absolutely no control over. You don't control where the S&P 500 goes or the Dow Jones. You don't control what happens with the Fed, and do they decide to change rates, right? Are they going to cut rates? Last year I was talking with people, and I remember them going into, hey, you know what, we're going to purchase a property. It was an investment property, but they were doing it based on the sole strategy that the Feds were going to cut interest rates this year. And one of the things that I talked to them about was, hey, if your whole strategy hinders on what the Fed does, that's not a prudent strategy. It's not smart to just make that decision based on what you think is going to happen or what the Fed is going to do. What you really need to be looking at is, and thinking back, right, to 2007, 2008, that was the worst recession the US had seen in modern times. During 2020, there was a slowdown in the economy, and we thought we were headed for that same thing that happened in '08, but it wasn't. It was only for about a 2-month period, and then things started to go up because of the stimulus that was placed into the system. All of these different things, nobody had an idea that they were coming, but the people that made money in those situations, what did they have? They had robust savings. They had cash on the side ready to deploy when they found the opportunity. And that's the thing you want to start doing. You want to start, if you haven't already, start building your savings. Don't overspend. Put some money aside first before anything else and spend what's left over. Don't spend everything and hope to save what's left over, right? You want to do that. You build that savings, and then you'll have capital deploy when you find that opportunity, right? And the funny thing is, once you have capital to deploy, a lot of things look like opportunities. So you really want to vet those decisions and make sure you're talking to the right professionals. Now, you may be working with some financial professionals, maybe some people that help you with your stock market investments. Maybe you have other people that are looking at things, you're talking with your accountants. But when's the last time you sat down and really looked at your cash flow, making sure that all the dollars that you're spending are going to the right places, but furthermore, that you're not losing money off your balance sheet that you could be retaining? One of the things that you can do is get an expert analysis. Click the link in the description box below and get a complimentary review, cash flow analysis from one of the experts here at Epic Financial Strategies. They'll walk you through all the ins and outs of the cash flow and help strategize with you on areas that you could be keeping money and retaining it in your pocket rather than having it fly off the balance sheet. If you've stuck around this long, please give it a like, right? If you found value in the content, share it with some of your friends, and be sure to subscribe so you can see more content just like this, and check out another video here.